Hey everyone, welcome back to Corporate Decoder. Today we're diving into Bullfrog AI Holdings, and let's just say they're facing a bit of a rocky moment that might make even the bravest investor sweat a little. So what's going on with Bullfrog AI Holdings? Well, this is an 8K filing, which is basically a report of important events that shareholders should know about right away. And boy, do they have some important events to report. The big news dropped on August 21, 25. The Nasdaq, the stock exchange where Bullfrog AI Holdings is listed, sent them a notice. And the notice says Bullfrog AI is no longer in compliance with a specific rule. This rule is all about how much money shareholders have in the company, what they call stockholders' equity. Nasdaq requires companies on their capital market to have at least $5 million in stockholders' equity to stay listed. Unfortunately, as of their report for the quarter ending June 30, 2025, Bullfrog AI stockholders' equity was just over $2 handballers. Now, don't panic just yet. This notice doesn't mean their stock is getting kicked off Nasdaq immediately. Their common stock will still trade under the symbol BFRG and their warrants under BFRGWA. But, and this is a big but, Bullfrog AI has only 45 days to come up with a plan to fix this. If Nasdaq likes their plan, they might get an extra 180 days, which is about 6 months, to actually show they've met the requirement. If they don't fix it by then, well then, delisting becomes a very real possibility. They do have the option to appeal if a delisting does happen, but that's a backup plan. The company says they plan to do everything they can to stay on Nasdaq. They're looking at different options and will submit their plan to Nasdaq soon. However, they also caution that there's no guarantee Nasdaq will accept their plan or that they'll be able to meet the requirement even if the plan is accepted. It sounds like they're acknowledging this is a tough challenge. Now moving on to a different kind of development, on the same day, August 21, 2025, the company's board of directors approved something called Refresh Equity Awards for their top people, the executive officers and directors. These are basically special bonuses given in the form of company stock or options. The company says these are to reward them for their service during a critical time and to help keep them on board because their existing stock options are currently not worth what they were bought for. They're underwater. So how does this work? A third of the award is given as stock that they get right away. The other 2/3 are restricted stock units or RSUs. These RSUs will vest, meaning they become fully owned by the executives over time. Half will vest on September 1, 2026, and the other half 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 on September 1, 2027. An interesting part of the RSU deal is that the executives could end up owning these RSUs sooner if the company is bought by another company, what they call a change in control, or if they manage to get a major new investment, a significant financing. In total, these awards cover over 267,000 shares if all the RSUs fully vest. This is a significant incentive for the leadership to perform well and keep the company afloat. Finally, the report includes what they call forward-looking statements. This is standard stuff in these filings. It's basically a disclaimer telling investors that statements about the future might not turn out exactly as planned because of risks and uncertainties. They mention that their ability to stay listed on Nasdaq is one of these forward-looking statements. They also state very clearly that they don't plan to update these statements if things change, unless the law requires them to. So let's break down what this all means for Bullfrog AI Holdings. The main story here is the Nasdaq listing compliance issue. Falling below the minimum stockholders' equity is a serious red flag. It suggests that either the company isn't growing its equity through profits, or that it has taken on too much debt, or its net assets have declined. For a company trying to establish itself, being on the Nasdaq offers visibility and access to capital. So facing potential delisting is a significant hurdle. The fact that they are only just above $2 million in equity while needing $2.5 million means they are not far off. But not far off often isn't good enough for the stock market's strict rules. They have a very small buffer. They need to either increase their equity by bringing in more money through a new stock sale, a significant loan that boosts their assets without too much debt impacting equity, or improve their profitability to retain earnings. The equity awards to executives are a common practice. especially when a company is facing challenges. It's an attempt to align the leadership's financial interests with the company's success and to retain talent. However, it also means a dilution of ownership for existing shareholders. If new shares are issued for these awards, the detail about RSUs vesting upon a change in control or significant financing is particularly telling. It signals that the management might be looking for a way out through a sale or a major capital infusion rather than solely relying on organic growth to fix the equity issue within the Nasdaq's timeframe. The company identifies itself as an emerging growth company. This status allows them certain regulatory flexibilities, but it also means they are still in a phase where demonstrating consistent financial health and growth is crucial for investor confidence. Looking at the overall picture, Bullfrog AI Holdings is at a critical juncture. The immediate task is to address the Nasdaq equity requirement. Their strategy likely involves a combination of cost-cutting, efforts to boost revenue, and potentially seeking new investment. The executive compensation plan shows a clear focus on retention and incentivizing leadership during this difficult period. The risk here is that if they fail to regain compliance, it could significantly impact their ability to raise capital and their overall market perception. Investors will be watching very closely to see if they can present a credible plan to Nasdaq and subsequently execute it. The market generally doesn't like uncertainty, especially around listing status. So this filing introduces a notable risk factor. What are your thoughts on Bullfrog AI's situation? Do you think they can navigate these challenges and stay on Nasdaq? Let me know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more deconstructions of corporate filings. Also, don't forget to join our Discord community for more discussions, which is linked in the description. Thanks for watching. See you next time.